Hey, I'm Chris Summers with Unhedged.
Hey everyone, my name is Austin Hankwitz, and today, this edition of Interesting Ideas between Chris and I, we've got a relatively interesting idea that we found online recently. The stock is called Amplitude, and we're going to get into all the fun things about what excites us about this company. The easiest way to describe what that is to talk about how companies like Walmart, Ford, Square, Burger King, Intuit, and NerdWallet use the company. So let's pretend you're this tech company and you sell some sort of digital product. Maybe that's access to software like Intuit does with QuickBooks, or maybe it's a digital product inside a mechanical product like a car with Ford. But regardless, this digital product is flowing to your customer in one way or another. Now, considering your entire business is built on how your customers interact with this digital product, wouldn't it be in your best interest to know exactly what this looks like, these interactions are looking like? And the specific path that your customers travel when trying to send maybe an invoice to a customer within QuickBooks, or allowing you to understand these upticks and drop-offs in customer usage and better optimize that task, or seeing the specific buttons they might press inside a setting on your your Ford F-150, allowing you to better understand user intent. Well, that's what this software company does, is they map out the entire user experience and what that looks like, from intent to, if your value proposition was accurately communicated to those customers, or if your on-screen instructions were made clear enough, etc. This is Amplitude. They're doing this for every major company you've likely heard of and used, which includes 26 of the Fortune 100 companies in the US. So through Amplitude, companies like Square can track customer usage, measure key performance indicators, better understand where change needs to occur, while also identifying major drivers for that change, begin to predict user outcomes if the change is made, and then finally share those learnings once changes are made. Just to really make sure you really understand what this company does and how valuable it is in this new vast digital world. Countless companies, I think it's 1,200 around the world those are their customers, but kind of just thinking about the total addressable market here for a second, countless companies around the world provide digital products, and billions of people interact with those digital products every single year, leaving behind traces of data regarding intent, understanding, usage, things like that. And these countless number of companies begin creating these digital products, or that are creating these digital products, need to decipher what these interactions do so they can better understand their customers. They can't go in manually and watch them, so they need a software platform that can run in the background and concisely determine trends, drop-offs, upticks, and trouble spots in order to make their digital product easier and more profitable. That is Amplitude. Amplitude is pioneering and completely unlocking a new growth lever for digital-first businesses, which in my opinion is going to be every business in the world if they want to stay in business by the end of the decade. It just makes sense, right? So there are three main ways that Amplitude makes money. They've got three products, right? The first one's called Amplitude Analytics, which was named the #1 product in analytics software by GQ. And this tool provides teams with fast self-service insights into customer behaviors. The second one is Amplitude Recommend, which is a no-code personalization tool that allows teams to increase customer engagement by adapting digital products and campaigns to every user based on their behavior. And the third is called Amplitude Experiment. And I believe this one was just rolled out about 12 months ago. But that's an end-to-end experiment solution that enables teams to determine the best impactful products, experiences for their customers regarding A/B testing. And through these three specific ways of interacting with customers, they're gathering over 900 billion data points on a monthly basis across those 1,200 different companies that use them. So now let's get into sort of how much money they make, how do they make their money. As you, I'm sure, would imagine, it's a subscription model. Their dollar-based net retention rate on their customers is about 119%, which is fantastic. I think they're going to continue to make money, given this massive total addressable market. The amount of money they're making right now, I think year to date, is $72 million, and that's through the end of Q2 2021. This is a 57% increase when compared to the first 6 months of 2020. And that kind of puts them, around, I'd imagine, a good $160 million for the year. With gross profit margins being about 70%. So what gets me excited, what gets Chris and I jumping up and down about this company? Two things. One, their growth levers. They have four main growth levers that are, in my opinion, they're just going to continue to push this company's success forward throughout the decade. The first is to acquire new customers in every industry, right? So since inception 10 years ago, this company has captured nearly 1,200 massive enterprises to use their to use their products, including the 26 of the Fortune 100. Number two is to expand product subscription throughout existing customer bases. And this is done through upselling and cross-selling. This kind of leans into that 119% dollar-based net retention rates. The third one is to extend product development within their platform. I think, I mentioned before their experiment sort of product there was released about 12 months ago. That's sort of what, the new iterations of the product, that's that third growth lever. And the fourth one's global reach. As we all know, every company around the world is going to be digital at some point. And right now, 31% of 2021 revenue, so the first 6 months, came from companies outside of the US. And I would imagine this number is just going to continue to increase. And the second reason I'm excited about this company is their CEO is Spencer Skates. He's an MIT graduate with a massive focus on engineering and technology. He's really smart. He's young, only about 33 years old. He's hungry for success and just really down to earth. There's a really cool video that we're going to put in the comments. I'm sorry, the description of this. That is a video of Spencer and the CEO of Zoom, Eric, kind of having a really nice conversation. But yeah, I just really excited about this company. The total addressable market is huge. Tons of really, really big enterprises are using them. Like I said, 26 of the Fortune 100. Gross margins are healthy at 70%. Revenue growth, I don't know why it would slow down. I'm sure it would see 55, 60% for the next probably 3 to 4 years. And I think what's really exciting too is they're only a $5 billion company. Tons, either an acquisition target like Chris would mention here pretty soon, or just tons of upside to be had. So yeah, Chris, what do you think, man?
Yeah, I'll tell you what I like about it. So they did a direct listing when they went public. When companies go public, the traditional option for an IPO is to do what's called a syndicated underwriting, where the company will pick a handful of investment banks. Those banks have equity sales desks. Those equity sales desks maintain relationships with all the big investors of the world, Franklin Templeton, Fidelity, T. Rowe Price, et cetera, Vanguard, whatever. And they place shares with all of those clients. In a direct listing, the company doesn't do any of that marketing. And what I think is interesting is, as Austin said, the market cap's only $5 billion. They got 102 million shares outstanding. Stock price is at 50. It went public just 2 weeks ago. The NASDAQ was not having a great day the day they went public, and I think it's just kind of off the radar. On unhedged.com, we track tweets as well, and you can see hardly anybody is tweeting about this. So I think it's kind of an interesting setup from that perspective. And then when, as Austin mentioned, they're growing revenue very quickly, driven by net dollar retention. I highlighted in the prospectus here on Unhedged how they calculate net dollar retention. You can read the actual formula to learn more about it and understand it. But if you look at other companies that are growing as fast as Amplitude and are what I would call sticky, meaning with Amplitude, if you start using their product, let me pull up their webpage here and we'll look at some of their resources on development. So basically, if you're using Amplitude, you've embedded code into your product, your website, whatever, your software, and it is very hard to remove that down the road. So I would expect their customer churn to be very low. As Austin pointed out, the net dollar retention rate's 120+%. That could easily continue to increase. And they're adding customers all the time. So what company does this kind of remind me of? It kind of reminds me of Snowflake. Snowflake's a data company. They're growing also like a weed. I can see here on Unhedged that Snowflake's going to be growing revenues a couple of years from now at the 50 to 60% rate, which is very similar to what Austin and I think Amplitude has the potential to do. And you look at Snowflake's valuation here, and Snowflake's trading at over 80 times next year's revenue. So, and that's owing to the rapid growth. If Amplitude were to trade at multiples this astronomical, and what drives these multiples again is the growth. This stock could easily be $200 to $300 per share versus $50 right now. How do I get to that math? They're doing 160 million of revenue this year. They're going to be at 300 million probably in a year and a half or whatever. If you put 80 million and 80 times multiple on that 300 million of revenue, then you're at 24, 25 billion. And as I said earlier, they've got the 100 million shares outstanding. So that gets you to that $250 stock price range.
Also think what's noting too, and kind of comparing them back to Snowflake for a second, Amplitude's gross margins, as you can see in Unhedged, are identical to Snowflake. They're right at that 60, 68, 70% gross margin range there. And yeah, I love it, man. I'm so excited for this company.
Awesome. Yeah. Thank you for bringing this one to my attention, Austin. It's a pretty cool little story. And the need to track data and user behavior is only growing, and Amplitude is kind of prime position to be the leader in that space.
Totally agree, man. Love it.
Awesome. Thanks, everyone.